Ladies and gentlemen, welcome to another edition of Independent Speculator Interviews, or In the Pit with Lobo Tiggre, as I like to call them. Our victim of the day, or our guest of honor, is Rob McLeod, CEO and President of IDM Mining. I've known Rob for some years, and I've followed the story of IDM Mining for a few years. But Rob, why don't you go ahead and give us an overview for our viewers?
Yeah, you bet. Thanks, Louis. So our principal asset is the Red Mountain gold project located in the Golden Triangle near my hometown of Stewart, British Columbia. This is a well-advanced, high-grade, bulk mineable underground deposit that has a significant exploration upside. And we recently just passed a pretty significant permitting milestone, receiving our provincial environmental certificate, which is basically the major hurdle that you have to cross in order to get an operating mine in the province. And we've just started drilling to expand resources.
Okay, well that's a good overview, and there are several things in what you said that I'd like to come back to, but let's start first with the size of the deposit. You have just over 700,000 ounces in the measured and indicated categories, which is a good start. And back years ago when you and I started in this business, even just 500,000 ounces was considered a very large and significant deposit. But these days it seems like investors, if you don't have, multi-million ounce potential, don't call us, we'll call you. What do you say to people like that, this isn't big enough to matter?
Sure. Well, it's, I understand that, size and mine life does matter for a lot of investors and certainly for a lot of producing companies. But, it actually kind of harkens to maybe what is one of the issues with our whole business and why, gold mining hasn't been the most popular industry to invest in over the past decade. And it has to do with profitability. It's still a business that is meant to make money. And Red Mountain is a high-grade ore body that is affordable to develop for a junior company like IDM. But most importantly, we'd be looking at a lower quartile or a lower decile producer. So, if somebody's looking for a 10 to 30 million ounce ore body, then IDM probably isn't for you. But if you're looking for what could be like a future West Dome or a future Richmont, a project that will throw off over 100,000 ounces per year of high margin production, with one of the top rates of returns out of any projects in the business, then you should look at IDM. And I tell you, in terms of the size of the property, it's big. It's about 7 hectares. There's a 16-kilometer long trend of the causative rocks that are responsible for the gold mineralization. We've mostly just been focused on the proximity to our current underground workings, but there is tremendous exploration upside. There's a lot of different prospects, and the ore body is wide open for expansion. So, like most underground mines around the world, more ounces will come with this project. So, and importantly, you mentioned it, measured and indicated, we're over 700,000 ounces. The first 2 years of the ore body are within 250 meters of surface, first 2 years of mining, and the average grade is close to 10 grams per ton, and it's all bulk mineable. It's a payback period we envision of about a year and a half. So this is the type of project that would make a lot of money. And, our long-term goal from this company would actually be to eventually pay a good dividend.
Okay, well, there are a couple things there. And I did notice that you have about 500,000 ounces just in the 3 deposit areas that are right near the portal. And that is very significant, I get that. But the answer to my question is size matters, but margin matters more. And we may come back with the size later if we continue exploring the project. Is that a fair summary?
Oh yeah, absolutely. Each year that we go out and drill, we typically add about 20% to our we typically have to drill on about 25-meter centers to have measured and indicated status. And if you factor in all hits and all misses on every single drill hole on the property, usually it adds 1,200 ounces or so on average per drill hole. So last year we drilled over 100 drill holes, and we added about 120,000 ounces of measured and indicated. This fall, we intend on drilling about 33 or 34 holes, which we hope to add some. But what we want to do is we don't have a lot of inferred resources on the project. I show this to a lot of different corporates. They're like, "Where's your inferred? You only have 60,000 ounces." It's because we have such a high conversion rate. This is not a nuggety gold deposit like our friends nearby at Pretium. It's a very consistent ore body. There's very good continuity to this deposit. So the last bit of inferred, we want to convert over so we can have every single measured and indicated ounce we can into our updated feasibility study. You see, we had a feasibility study that was basically updated our resource back in June, and due to 43-101 limitations, we cannot discuss that anymore. We have to update it again because we have a new resource. So we're looking for it to update our feasibility.
Sure. Well, that makes sense. But let me just be clear on this before we move on. You're adding ounces as you go. You're expanding known areas. But is there a new target somewhere along that 16 miles trend that you talked about, or is there something that could blow this wide open? I'm giving you a freebie here. You get to wave your arms.
Yeah, for sure.
Is there something like that, or is it pretty much it is what it is, and we'll add organically as we start mining and finding hopefully more?
So what's remarkable about this project? First of all, and we've discussed this previously, and probably have discussed this with other companies. Is the rapidly melting alpine glaciers up there are exposing so much new terrain. And in one area, it's called Lost Valley, which is about 4 kilometers to the south of our main resource area and location. Just over the past 10 years, there's been a glacier has pulled back, revealing a gold molybdenum porphyry. And that would be similar, say, to Seabridge's KSM deposit, Mitchell Zone, or you go to Pretium, their Field Zone, which is actually the faulted extension. That is the gold molybdenum porphyry as well. But what we're really excited about, when we put out some great trenching results here, was these high-grade veins that are, typically 1 to 2.5 meters wide, that are running, multi-ounce values, high-grade silver. Probably all of our samples that we've collected this year, they average, about 15 grams per ton gold equivalent. This is brand new. And what's really fascinating, and I know you like to get into the weeds on the geology, Louis, is that the geochemistry of this deposit, and it is not the Jurassic Age system, which is, the nearby past producing premium or KSM or Dolly Varden to the south. This is a young porphyry system, 56 million years old. That's earliest tertiary. If you dropped Lost Valley into Alaska or the Yukon, you wouldn't think twice about it. It's got that same geochemical signature. Bring out, people that have worked up in Alaska, and I've spent a lot of time there in my career, it looks like Fort Knox, but Lobo Mine, which was Sumitomo and just bought by that Australian outfit, Northern something. Mobilized high-grade vein, and this is a really exciting target. I can see enough gold there on surface. I'm very confident this will be a working area to feed a mill on the Red Mountain project. And this is also kind of a sort of a side potential a portion of our business model. Is there are currently no road accessible gold mills located in the Golden Triangle. Brucejack has a mill, but that's, you've got to drive up a glacier to get it. There's a mill at Red Chris. There's a old mill building and tailings facility at Ascot's Premier Deposit, and I hope that gets repaired. But there is currently nothing where, if you have a smaller ore body, we're going to be right next to the grid power. We're going to be right next to Stewart. Our mining crews are going to live in the community next to a paved highway. There's the opportunity to blend ores, put it through the Red Mountain Mill, and that's just organically growth potential for anchored from a central mill located on IDM's Red Mountain property.
That is interesting, and I can tell the viewers out there, your shareholders and my readers alike, I have been to that property a couple times, including under previous ownership, and I've actually seen the glaciers, how much it's receded, and it's really striking to go somewhere and look at a place that was once covered with ice and now see the bedrock exposed. It's quite striking. So that was your freebie. You get to wave your arms about all the blue sky potential there for the deposit. But let's get back to some of the numbers you mentioned, and the high rate of return previously projected was really interesting to me, given that it's not exactly remote, it's not far from Stewart, but it is on top of a mountain, and there's a long winding road that has to go up there. You can't really put the plant on top of the mountain, so you have to truck ore down there. And while the grades are good, 5 to 8 grams per ton, it's not Pretium style grades or something like that. So, how does that economics work? What is it that makes such a high IRR number possible? Why should anybody believe that number, Rob?
So it's, this isn't a narrow vein type deposit where, it's 1 or 2 meter wide with a, a single miner with a stoper. The measured resources we have, they're up to 40 meters wide, and they weighted average, we use this number, 16 meters. That's the average thickness. So over 8% ore body is amenable to long hole stoping. So these are big stopes where 2, 3, 4 to 7,000 ton individual stopes, and we're looking to feed anywhere from a 1,000 to 1,500 ton per day plant. So you don't need a lot of working areas. You just need a few of these larger stopes, and then you would haul the ore down. We are on top of a mountain. We do get a lot of snow up in this part of the world. We're up here. This is what we do. Snow's easy. You plow it. If you have avalanche risk, shut down, and you have enough ore stockpiled at the mill that if there is a time where you have to shut down for a few days, while you make sure that the conditions are safe for workers, you keep on processing, and due to such a nice wide ore body ground conditions, you won't have that bottleneck that plagues other projects. So it's all about dollars per ton. So it's so low on the mining side. And actually, one of the reasons why we want to get our feasibility study updated, and this, our largest shareholder is the Osisko Gold Royalties. And after we published our 2017 feasibility study, we commissioned some of their technical people from Quebec to do a fulsome review of what was in that 2017 mine plan. And I tell you, if you really want to optimize an underground mine, you get some 50 and 60-year-old mining engineers from Val-d'Or. And so they took a look at it's a wide tabular, but in some areas folded ore body, and we had either long hole or cut and fill as kind of the have a lot of sustaining capital. And Cisco's engineers, they suggested actually a very innovative method that was it's named the Holloway method, after of course the Holloway mine in the Abitibi belt. And it's a retreat method, but it is where you have 2 drifts on ore, and one in the hanging wall and one in the footwall. And by implementing that method alone, it would save this project $28 million over 5 years. Additionally, our ground conditions are so good that we can adjust our minimum angles for long hole stoping. In the previous feasibility study, it was 55 degrees. Since the ground is so good here, we can probably go down to 43. So just incorporating those mining methods, the magnitude of savings could be in around $50 million. And since the capex is affordable, we're not really, we're in the mountains, but there's a lot of places way more isolated in the Golden Triangle than us. This is an affordable deposit, so the payback period is quick, and then you're generating lots and lots of free cash flow. And importantly, the grade's really consistent, and we're not aggressive, with aggressive top cut or other. You just, as I said, have to look at our inferred resources. We don't have a lot because we're not projecting for hundreds of meters away from drill holes. This ore body is going to make a lot of money, and I think anything else we find, each incremental year that we have has such a tremendous impact on that NAV. So that's what we hope to demonstrate also with our upcoming drill program, is some of that underground exploration upside.
Well, highly consistent is music to my ears. That's exactly what I want to hear. Whether it's bulk, open pit or underground or whatever, consistency is really what makes things work. But it's interesting to hear you say that, because at the same time I look at the new geological interpretation and it looks to me like a Pringles potato chip or a Ruffles. It's all these wavy stuff, and you have these major structures cutting through it and these different zones that are broken apart from each other by all this. And yet you say that the ground is really good. Maybe this is a little too technical, but for readers and viewers that want to know, I mean, it looks kind of complicated to me, and yet somehow you have these consistent thick zones. Why is that, or how is that?
So it is challenging geology, and in fact, we had a geological breakthrough last fall and winter of some what were actually some geological problems that back when I started my career at this project in the early 90s that we had. We thought we had a series of parallel zones, and they would die out down dip, and then they'd pick up again. And actually, what really precipitated the change in philosophy here and model was, one of the and you probably met them in your travels, arguably the magmatist geologist in the world is Dick Silito.
Yes, I have.
Cisco's geological, I guess, team is a group called Talisker, and two very good Harbert and Ruben Padilla. They brought him up last year, and he like Dick and the guys. They didn't give us any silver bullets, but they taught us two really important things. Number one, simplify your geology. And if you look at some of the success at Barkerville or Windfall or some of the other projects that those guys have been associated with, that simplification of the different rock types was a really important key. The other was, Dick said, trust your geology, trust your logging. We thought logs were wrong because they didn't fit our model. And once we simplified things, and we put the surface geology under a cross section. We all worked in paper over the winter to really get into the weeds and the geological details. And it's remarkable how often these models will just fall out of it. So instead of parallel zones, we ended up with identifying, to use this paper as an example, like high amplitude folds, like waves, right? And the folds, they came in after the gold mineralization was formed. So the ore body itself is folded into these we call high amplitude, in the order of 200 to 300 meter folds. And so what that has done is it's opened up areas right adjacent to our current measured resources that we had thought had closed off. They're not closed off; it was just folded away, and it wasn't drilled properly. So we're going to be testing that model now. It's faults that chop it up. So there's about these 100 to 200 meter long blocks that form the Mark and the AV and the JW zone and our primary resources. And there's a lot of smaller faults as well too that move the ore body over, say, a meter or less. But when you have a wide ore body and you're looking at dilution to long hole stopes that are over a meter, those offsets don't matter. If you have a 1 meter wide vein, it's moved over a meter. That's a big deal, right? So it's one important thing, certainly for your subscribers, to single companies. Two different types of continuity. There's good grade continuity for projects like Red Mountain and a lot of other juniors that are up there. It's the structural continuity that you really have to look at. You can have these faults that will chop up an ore body that will, if it is small, shrinkage stope type mining, miners can handle it like they did back in the 20s and 30s, or in some developing countries in the world where labor costs are cheaper. But here with this deposit, you've got good continuity of grade, and got good continuity of structure, which is, I'm a geologist, I'm not a mining engineer, but that's certainly what you want to see if you want to make a lot of money out of it.
Okay, fair enough. So it all sounds great, but one of the questions when you have a story like that, especially with one that has published such a high margin, and 100,000 ounces a year is pretty significant. Maybe that's not big enough for the Barricks or the Newmonts of the world, but there are mid-tiers that would be happy to have 100,000 ounces a year of high margin production. Why do you still exist? Why haven't you been bought?
There is a lot of interest in this project now, and in terms of M&A, it's typically we have been looking at different M&A opportunities that we believe would be accretive or good value to our shareholders. In general, it's not prudent to comment, but you always it's part of my job as a CEO to make sure that there are as many boots on the ground and as many different companies that would be in, say, a data room to be familiar with this project. One of the big elements actually was permitting risk that we have faced over the past couple of years. British Columbia, which I don't believe it's fair, but it's the reality, is it often has a reputation to permit projects. Like last year, after the current New Democratic Party, which is a socialist party, was elected as government in the province, there's I hear from like a Dutch portfolio manager that would somehow know that this provincial party is anti-mining, and they took away Windy Craggy 35 years ago. It's not the case at all. It's like they're maybe they have some issues with oil pipelines. We'll give it that, but we have had nothing but tremendous support. And this was basically, it came to fruition a little over a week ago, where I was actually in New York City at a conference, and the phone started ringing, numbers from Victoria, and it was members of the government congratulating IDM on receiving their environmental assessment certificate.
Yes, I did notice that certificate being issued. Congratulations on that. I know that was a big sigh of relief, and that does make sense. That's a significant de-risking of the project. And I know you can't discuss any confidentiality agreements, but I'd be curious to know if you had any rings from other mining companies since that permit was received. You don't have to answer that. But congratulations for that.
Well, we did get a lot of congratulations, especially if there are from, say, companies that have been through, those that have been through the process, and it takes time. And for us, actually it wasn't, it was 2.5 to 3.5 years, depending on how certain end dates. And it's fairly expensive for a junior. It cost us about $10 million to get to this stage, but now the federal approval, which 3 levels of government are always involved with certainly in the Golden Triangle for mine reviews. The federal approval we expect to come in January. It could come a little bit sooner. I think tomorrow's the final day of the last public comment period. But the federal government's part of the whole, and we all worked together to make sure that there was that there would be a project here that would, protect all of the value components, whether they're social or environmental or cultural, that would be in place. But, arguably most importantly is, our best friends up there are the Nisga'a Nation. And, my family has been worked with the people of the Nass River, which is the valley to the south of Red Mountain, for over 50 years. And they were very involved in this. They were tough on us, but they were fair. And it is our objective is to get a benefits agreement, and they're working with us out within the next couple of months. They're the 3rd level of government.
Yeah, I noticed the Nisga'a comment in the press release about the EA, and that was very encouraging. And one thing that people need to be sure to be clear about, particularly in BC, is, are there any conflicting First Nations land claims there, or is it just the Nisga'a that you have to deal with, or is there anybody else?
So in BC, there's sort of 2 different levels. We're on only 3 First Nations in British Columbia that have settled treaties, and the Nisga'a were the first. And so that boundary, that is their strength of claim. We consult with them. There's another group that and we are basically we get guidance from the provincial government in terms of Indigenous consultation. We also have to consult with the Métis, and then there are other groups that, including one called Sikh that we have a responsibility to inform. So they're part of the group. They're part of. They give feedback, and the government does listen to them.
But just to be clear, the project, the land, is it under more than one First Nations land claimed, settled claim area, or is there any unsettled claims that could come back to possibly haunt you later?
It is a settled treaty, and there's a constitution there. So no, there is one, and that is the Nisga'a Nation. We have a philosophy up there that we're all Northerners, and we respect the opinions and the any sort of guidance from any of the First Nations and any locals in the North. And this it's all a matter of record. Your subscribers can go and look to the government websites at the any sort of public comments. I don't even know if we had a negative one. Aside, there's a couple of snarky ones that came out of Alaska. There's some concern over transboundary watersheds there, but otherwise, it's you do things right, you engage properly, and you do not told to do it by any sort of level of government, but because it's the right thing to do. So if we've done anything, correctly with this company, it has been certainly on that social side. And, when you go up there and you see, all the local faces that are learning to be diesel mechanics, diamond drillers, underground miners, it's we're very proud of the culture that we're building there of cooperation with Nisga'a and the people of Stewart.
Well, that's one I'm willing to believe you on. Not that I disbelieve everything else, but I'm a professional skeptic. But you're a local boy. You couldn't show your face at home if you messed that up.
Oh yeah, there'd be taking me back around outside the bar.
I imagine so. Okay, I've got one more big question left, and it's the doozy, and that is, let's talk about your share structure and your financial situation. You look like an Australian company. You got 500 million shares out. How did that happen, and how do you fund your activities going forward with that kind of? Assuming, of course, you don't get bought out. If some mid-tier buys you out tomorrow at 100% premium, everybody's happy or happier. But assuming you have to go forward and build this mine, how do you do that with that kind of paper overhang?
So, if we would have to do a restructure, and we've been very open with our shareholders about it. In fact, in the spring, we were pretty close. We had buy-in from most of the major supporters, and then, due to some other factors, we decided not to. We've had, I get it. We've had tremendous participation from, there's been several very long institutional holders that, have basically had our back since, we started what is a very capital intensive project to go through the feasibility study process, to go through the permitting process, and to keep on growing the ore body. When everything is helicopter supported, it takes a lot of money. And so, we're going to probably almost 65% of our shares are held by institutions or they're held by corporates. And so, but it is an issue. We're trading at 6 cents. You look at our chart, it's been flatter than flat. So we want to get some momentum. We want to have some major triggering event that we would then go and canvass our shareholders again if they'd want to do a restructuring. We've done a lot of research on it. Some say that it's paid down. We looked at 30 companies, and it's a scatter plot. It usually depends on the market and what those companies are doing. So we would probably look at doing a restructuring. In terms of where we're at in cash position, due to some different corporate reasons, we put off financing this year until this fall, and we were starting to get on fumes. We had like less than $1 million in cash. it's marketable securities that can still back us up. So we just announced a raise that we of 4.1 million that will be closing shortly. But then we do have some other ideas that call it accretive that would be able to finance the project to the next stage. Are we going to be raising money to build this thing right now? Not a chance. $30 million market cap, raising that equity obviously is way too dilutive. But this project could handle a significant amount of debt. When and this would come out within the feasibility study. But when you see how rapid the payback period is, and you factor into it should be an affordable capital cost of around 150 million, is you can probably stand a 50% debt burden, if not higher. That would you'd pay back quickly. That would minimize some of that equity dilution. But what we want to do, and is our goal, and through drill results, continued permitting milestones, got to keep on hustling. And probably when you have lots of institutional holders, it's redemptions. You get one cleaned up, and then another one starts to, sorry, Rob, love you, but we got to sell, right? And once we start getting momentum in the right direction, it's happened twice with this company, where you do see the company, you can see that value change very, very quickly once people really do realize what this project has. It's never an excuse, but when money starts cycling back into the gold space, this is one of the only, near shovel-ready projects anywhere that's affordable. And so we expect that we will see that re-rating, or maybe it comes through the drill bit. That's we're in a market that appreciates discoveries. We've seen a bunch of them up in the Gold Triangle this year. So we're drilling some areas where we don't have any resources. They're pretty big step outs. We also do have some more surface numbers to come. Getting back to the glaciers retreating. There's an area just on the east side of the portal when you're up there. If you'd be looking over the beautiful Cambria ice field. Just over the past 2 years, there's been about 1 square kilometer of new exposure, like Red Mountain, like the beautiful rusty rocks. We've got a bunch of assays coming out from that area. It looked like there's icebergs sitting on it, melting so quickly. And one of the important geological observations there was that there's alteration and gold mineralization within volcanoes he thought were too young. They're the same host rocks to the nearby Premier mine. Same host rocks actually as Bruce Beck. And this is just melted out. They're called the Unique River Formation volcanics. So we're excited to see what some of that's not a drill result, it's going to be surface results. But for those that are active and know the Golden Triangle, once we get some results out from those rocks, people are going to notice.
Okay, so I noticed that you said the 4.1 million you're raising, you expect to close on it soon. So we can take that as you're likely have most or all the money that you wanted, so you're able to go forward. How far do we get with that $4 million? What does that get us in terms of deliverables?
So it's that will get us this drill program. This will give us the appropriate capital to get through the federal environmental approval. And, we're actually working on potentially a bit of an alternate means to have our feasibility study updated. That's currently unbudgeted right now, but it would watch the news over the next couple of weeks in terms of getting that launched.
So, what about
but it'll still mean early next year we're going to have a requirement for additional funds.
I understand. Okay. So obviously, the hope is this gets us some exploration results and it gets us milestones in the de-risking, which can get us revalued. So if there is a restructuring, it happens at a much better place than 6 cents.
Certainly when we have some momentum, and we do have a plan on that capital side, but it's you want to, in challenging markets like this, you want to have your net cast pretty wide and be able to get to that level where you're de-risking the project and you see that the project is going forward with development. So and it comes back to, and we've been fairly open with it, looking at M&A possibilities, and it's where there's appetite either for Golden Triangle roll up or a Western North America or high grade deposits or whatever's in the best interest of shareholders. Could include project sales.
Well,
So,
since you're coming up on a new feasibility study, based on the numbers there, is there maybe a possibility of a streaming deal or a royalty deal as opposed to more equity? Could that happen?
So we will look at anything. We're a bit hesitant on it because there's an existing 1% NSR to Franco. There's an existing 2.5% NSR that goes to a prospector. There's been there's advanced royalty payments since 1992, which has taken a big dent out of it. So that's a total of 3.5%, call it. And then there's a small gold stream to Seabridge, who are the property vendors to IDM. And that is 10% of annual production, capped at a total of 50,000 ounces per year, or total of 50,000 ounces, at a price of $1,000 US per ounce. So there is already that type of, but if somebody did offer a screaming deal on a royalty, and when you're trading at a fraction of what the NAV is, we would canvass the shareholders. We would take it to the board. So there's the royalty companies with quite a bit of money out there right now looking to deploy on good projects in near-term producers. So you throw that into the options category. We've to be blunt, we've looked at things like convertibles, but that when you're a non-cash flowing company, pretty hesitant to take on debt unless it is easy debt or it can maybe something that can be rolled into project finance. So it's tough times. You don't want to take all this hard work and throw it away on a bad deal. So we are going to be on that side to really capitalize the project and head off to the races in terms of development.
Okay, well, I appreciate your cautious answer there, and I'm sure your shareholders do too. I appreciate your time, and you're sitting still for some nasty hard questions here, but that's what people want to know. So congratulations on the EA. Good luck with the drilling, and I will definitely be following the story, and we'll talk more soon.
Sounds great, Louis. Thank you so much. Take care.